This year, I'm approaching my 30s, and I wanted to share with you my journey in terms of making my own money, in terms of start saving and start investing. As I'm approaching my 30s, I was reflecting on my journey and how far I've gone. And I also realized that I did not come from a family where my parents talked about personal finance and all of these things. So there was a lot I learned on the way. And for full disclaimer, I spent my first few years of work working in finance. So I got exposed with people that were savvy in finance, and they were investing their money, and they had all of these ideas around how to make more money. So I really started thinking, okay, what are some of the things I can do? Because I've never really paid attention to this. And so I've developed kind of my own process and what works for me. Of course, this is by no means saying that you should do the same, but I just want to share my story and what worked for me as someone that did not grow up with a family that was very savvy in investing. I'm 29 years old right now, and I started saving when I got my first job. So I got my first job in London, in the city of London, right after university. I think I was probably 24, 25. You know, in Italy, we study a little bit longer than anyone else here in the UK. As soon as I got my first paychecks, I started kind of accumulating the money. And to be fair, for the first 3 years or so, I didn't really think about doing anything. Every month I was saving a little bit, but I didn't really think about what to do with this money. I was just letting it sit in the bank. I think at some point I opened within my bank a savings account, but one of those that where you can, take money in and out. I wasn't necessarily using that money, and it wasn't giving me pretty much any interest, but I thought, okay, well, better than nothing, better than keeping it in my current account. So I guess for the first 3 years, I mainly just saved money. My money did not grow at all for those 3 years. But again, I didn't have a lot. I had just started working. London is a pretty expensive city, so I didn't really think too much about it. Then when the pandemic hit, I started talking with my friends and saying, okay, but how do you invest your money? The first thing I did was investing my money into a service called Nutmeg. You put the money in this account and you don't have to pick the investments one by one. But what you can do is that you say, okay, I am 25, 26. I want to retire, at age 60, or I have an objective in 5 years, I want to buy a house. So you set your time horizon, you set your risk profile, and typically if you are young, my age, what you would do is that you would set a pretty aggressive risk profile because you have a lot of time to kind of grow that money. So even if you have economic cycles, they go up and down, as we've seen now, during the pandemic, it was up and then down. At least you can you don't have to take money out during the low part. You have enough time to recover from these economic cycles. So you put it in something that is pretty aggressive. You put it in something that has the time horizon that you need in terms of when you need that money back. And then they pick the investments for you. So they would put it in a portfolio that is pretty balanced. The reason why I chose this is because I don't like investing. I don't find it fun to pick specific stocks, manage a portfolio. And so I just wanted someone else to do it for me. I pay a little bit more, I would say, than if I were to DIY do it myself, but I don't have to worry about it. A couple of important things on Nutmeg that I would definitely suggest. First of all, make sure you're leveraging the ISA system in the UK. You can open it in your bank, you can open it one with Nutmeg or with other providers, but it's a type of account that is not taxed. So you can invest up to 20K a year without getting taxed on that money. Because typically on another account, so for example, if you have a normal savings account, if you earn some interest on that account, you will have to pay tax on that interest. So if at the end of the year your interest is £200, then on those £200, you're going to pay income tax on that. Whereas with the ISA, up to 20K per year, you're not paying any tax. And then the second thing, which I would definitely suggest doing and worked really well for me, is automatic investing. And that means that every month, I move automatically via direct debit the same amount to my ISA, so to my Nutmeg account, and I automatically invest it. Now, some people may think this is crazy because, well, how do I know if I have enough money? Start small. Start with something that you know you're going to save every month and then increase. What is important is that you build the habit of investing, and also that it's an automatic decision. You don't have to sit every month and say, oh wait, how's the market doing today? Oh, let me check. Oh yeah, it's low. Yeah, I should wait. I should wait now. Tomorrow is going to be lower. Let me go and invest it tomorrow. Timing the market is extremely hard. It's hard for people that work in finance. It's even harder for people that don't do this as a job. I would personally not suggest trying to time the market unless that's your job and you spend 24/7 on your laptop looking at trading sites and you can kind of time it to the second because that's what professionals do. Yeah, so that's how I started investing my money. I have my current account, I have my kind of low interest savings account, and then I have my Nutmeg account. I also decided a few years after starting to work to apply for a credit card. I used to have a BA Amex credit card to accumulate points with flights. I've now recently switched to a cashback Amex. So these are both free cards, so you don't pay for anything. Of course, if you use it a lot, for example, you can pay your rent with the credit card or big bills. I would highly suggest going for the paid version, because let's say you can pay a small amount, but then the benefits are much bigger than the ones you get with the free version. The reason why I got it is not because I wanted to kind of have a loan or I needed money, but simply because I often rent cars, and I noticed that when I rented cars, they often asked for a credit card. Having a credit card is extremely good to build your credit score. So the credit score is a score that everyone basically has, whether they know it or not. And it's a score that is calculated by different agencies to understand whether you are worthy of receiving credit. So let's say tomorrow you want to go and apply for a mortgage. The mortgage lender or your bank will look at your credit score to understand, okay, is this person someone that I can give my money to and I'm gonna be sure that they're gonna give it back. Again, whether you realize it or not, you have a credit score, and the credit score is built with things like your energy bills, your current account with your bank, whether you are registered to vote or not. So you will have a credit score, and if you want to check which one is yours, you can go on experian.co.uk. I'll leave the link below. One of the ways you can do to improve it is having a credit card and making sure that you pay every month the full balance of the credit card. In my opinion, credit cards, you should always pay the full balance. You should never pay the minimum payment because the interest on these credit cards is very high. You don't realize it and you're just gonna have spent kind of the double of your balance in interest. So I think credit cards are great if you use them well, which means use them for all your expenses, making sure you have an automatic transfer, again, from your current account to automatically pay the full balance on your credit card every month. And then, accumulate points, build your credit score, which is, again, very useful to make sure you get a low, for example, interest rate on a car loan or on a house, etc., etc. This is what I do today. In terms of my future plans, I think I'm going to change a few things around now that I've been saving and investing for a while. The first thing, I mentioned it before, I switched my credit card from a British Airways to a cashback. The reason why I did this is that I don't travel a lot with British Airways. And so I found that, to be honest, I wasn't accumulating enough points with my card to make it worth it. Whereas with a cashback card, I know that the more I increase my spending, the more I'm going to get cashback. Now it's not a lot, but I know that when I will increase my spend, it's gonna go up. So I won't have to think about using points or rewards. I know it's a cashback, I get money back, and it's a very straightforward system. In terms of my investments, I've been investing with Nutmeg for a while. What I'm looking to do is decrease the fees that I'm paying in my account. My future plan, I have not done it yet, is investing in target date funds. So these are funds that have a very long-term investment strategy. It starts very aggressive, and then as you age, it will adapt your portfolio based on your age. And so we start going less aggressive, up until the age of, let's say, 60, 65, when you want to retire. If you need your money in 2 years, it's not probably the best investment, but again, with a very long-term perspective, making sure that you prepare for the future, for your pension, maximize your investments. That I think is something that I'm looking to explore. I hope this has been useful, and I hope it helps you start investing a little bit and understanding a little bit more how things work. And I'll see you in the next video.